Investors and traders, welcome to the channel Market Chart Pattern. Today is 19th of January 2025. Hope everyone is having a great day. We'll be taking a look at the key US markets for this segment. Let's start by taking a look at the bond markets. As always, the video is for educational purposes only. It is not a financial advice. We are taking a look at the shorter end of the curve, which is the US 2-year Treasury note. You can see that the yields have been a little bit of a range bound in past week, and 13th of January is when we have seen the market put in a bit of a top right here. There was still a possibility of 4.46%, which is 61.8% retracement. What we have seen is the market, meaning stock market, actually put in a rally since the 13th of January 2025. We'll take a deeper look at the stock indices later in the video, but just want to point out that we saw the yields ease last Monday, and that has been basically a factor for the risky assets. Last Friday we have seen the yields pull back a little bit. Maybe that could be a bit of profit taking right here, but if we just take the symmetry and assuming this is some sort of a top, we could see further weakness come into the yields, but it's really, if it's able to get below this 38.2% retracement, which comes from 4.07, that in my opinion we begin to see a deceleration, or basically the yields move lower quickly. So this is what we are taking a look at in the 2-year Treasury Treasury note. Now let's take a look at the 10-year Treasury note. This is in yield terms. The symbol is CBOE, 10-year Treasury note yield. We have seen a pretty big move in the yields rising since September of 2024, and ever since the Fed actually started their rate cutting cycle, we have seen these yields from 10 years, and especially on the longer end of the curve, to actually rise by quite a bit. So this is something really interesting, that as Fed begins to cut rates, the yields on the longer end of the curve are actually rising. So there is just not too much influence on the longer end of the curve. It's really the shorter end of the curve which gets impacted, but we try to take a look at from 2-year onwards. So here we can see the market on Monday, 13th of January. This is where we began to see a pullback, and here it closed in terms of the yields around 4.608 percentage points. So watching this one just below the 20-day moving average, we'll see whether this is some sort of top of significance, whether we see a retracement. If we just take a retracement from this low to this high, I think we are very close to the 38.2% retracement, which comes around 4.55, so not too far behind. There we go. So there is a chance we could see a little further pullback into the yields, and if this 38.2% retracement is not held, we could see a further pullback. So we'll have to wait and see. However, we can see that the trend for the yields moving higher has been pretty strong. So this market looks, in terms of the yields, pretty bullish actually. We had a really nice resistance coming right here, and we saw a pretty nice pullback, but then the yields actually started to move higher really quickly. There's a possibility we are in this ABCD, which could see actually this 5% being tackled, which is gonna be not something good to take a look at, and there's a chance that the 5% might even get defended, so meaning yields get pushed down. Something really interesting as well, there is a correlation which exists as of now between the 10-year Treasury note yields and crude oil actually. So let me actually do it the other way around. Let me bring in the chart of crude oil. Here we go. So this is the daily chart of crude oil, and let me bring in the 10-year on the same scale. There we go. So you can see excuse me, we have the this line, this purple line. This is basically the 10-year yields, and then this is of course the crude oil. We can see there's a pretty nice correlation between them. The yields rise and the crude oil is rising. So that is really interesting. And this during this period when the yields were actually moving lower, crude oil was also moving lower. So this is something really interesting to watch. And I believe the recent spike that we have seen in crude oil has something to do with this spike in the yields as well. And if the yields actually begin to move lower, there's a pretty good chance if the yields are easing up, that the crude oil will actually begin to move lower as well. And of course, if crude oil remains higher, this is actually a harbinger for inflation, which obviously will have an impact on the interest rates. So pretty interesting observation, this kind of correlation which exists right now. It might not exist in previous periods, but right now it happens to be there. Now let's take a look at the symbol ZN, which is the 10-year Treasury note futures, and this is on the price side of things. We can see that the market found some support right from the 78.6% retracement of these lows from October 2023. Now, thus far, it has just been a bounce, which could pretty much end up to be a dead cat bounce. It went right to the 38.2% retracement, and we have seen a pullback. Only getting above this will give it more traction, and maybe we can see yields or the price move higher, maybe a little bit higher, maybe come to the 61.8% retracement around 110 level. So we will have to wait and see, but the market is really at critical levels as of last Monday, 13th of January. So really need to be carefully watching this market. And if we take a look at the 30-year Treasury bond, here we go. It has this 78.6% retracement right here, and we have seen a bounce as well, but thus far it is only a bounce, pretty weak bounce as well. But for 3 consecutive days the price has moved higher, so meaning the yields have actually moved lower. But it's really for this market return, I believe that this swing high around 120, that needs to be taken out to the upside, and then we could say, okay, perhaps we might have seen a pretty important low come in, but this market remains pretty bearish. But the good thing is that the move to the downside kind of has stalled at the 78.6% retracement of the lows of October of 2023. So let's keep on watching these long-term rates right here. Now, let's take a look at the US dollar. So the dollar remains pretty strong, actually. It is very stable. If you guys remember, we had actually been looking for the dollar to actually move into this region. I'll show you more of this on the weekly chart. And here we were expecting a rally, but this stronger rally is actually really surprising for me, because I thought this 107 level was a pretty important top for the dollar, but of course the dollar is so strong that it has actually exceeded that. And this is one of the reasons that when the Fed actually began to cut rates, the longer end of the curve started to actually rise in yields, and that also actually impacted the US dollar. So the US dollar is also really strong. But this kind of strength over an extended period of time for US dollar might actually, in my opinion, begin to hurt earnings for companies, because a lot of the multinational companies also have operations outside, and of course those could actually get impacted in terms of the exchange rate. So it's really interesting. We were looking for this kind of pattern formation. The price actually has completed this pattern. I would expect more of a range bound behavior next week in the US dollar. But if we take a look at this on the weekly chart, this is where we had pointed our region, the market to get into, and we were looking for a move higher, which we got. And I was just basically looking for 38.2% retracement. Once it was broken to the upside, I knew there's more strength into the move, but it took out 106, 107 level, which is really interesting to see. Now it's right into this box that which we have been watching for quite some time. There's still a possibility, if the dollar remains strong, we can hit the 1.618 expansion level, and then we also have the 78.6% retracement at 111.45 level as well. So that is another strong resistance level. So the market was on the weekly basis sideways, range bound market. Let's see what the next week will bring For us, there is a chance that we might actually remain range bound sideways market for next week as well, and then we'll see what sort of move the dollar would like to make from these levels, because it is really critical levels where the dollar is right now. Now if we just take a look at some of these fiat currencies, here we go. This is the flip side of the dollar index, because euro is about 52%, and we had been watching for this level right here. The market got into this level and actually closed the week in positive. That is a good sign, but still a lot of weakness right here, so we'll have to wait and see for further strength to come in other words, weakness into the US dollar. But this is the level that we were watching. Getting below this one spot or 515 level, it's gonna be pretty bearish for the this currency pair, Euro USD, and we could see move towards the lows of September 2022, so par or even a little bit lower. And on the daily chart, we were watching for this pattern formation right here. We had this ABCD completing right here, 1.618 extension of this bigger one. So we had a number of these things coming together, and we have seen a bounce right off it. The biggest rally in terms of symmetry has been this much, so I would just expect a bounce thus far. Maybe it gets up to 1.047 level, 1.05 level, which could be pretty strong resistance. But looking for if there is going to be a bounce, in my opinion, it's more likely to be a bounce rather than an even like CIT change in trend. But these are the levels that we are watching. We'll have to keep on watching these for quite some time on the weekly basis till the situation or the price action actually begins to clear up for us. Now let's take a look at the USD JPY. Here we go. So the USD JPY, this is the daily chart. We were looking for this market with the possibility of getting up right here on the daily chart. It has thus far found some resistance and moved lower right into 38.2% retracement, and actually it has last Friday closed positive for the day. Actually, there is a correlation which exists between this and the 10-year treasury yields as well. So let me actually try to bring this right here. Here we go, how to put it so that we can easily see it. Okay, I think I'm gonna put it on a separate pane, that way we have here is the new pane. Here we go. You can see that there is a pretty good correlation between the Japanese yen, USD JPY, and the 10-year. Here, this is where the yields began to rise for the 10-year, and the currency pair also put in low, and then here another low has come in terms of the yields, and then it began to rise, and the currency pair began to rise as well. So if the yields pull back, then the chances are this pair is actually also going to pull back. So there is a pretty good correlation. We have seen two correlations thus far between the 10-year treasury note and the crude oil, and then also 10-year treasury note yields and the USD JPY currency pair. So there we go, and let's take a look at this on the weekly chart. So there is a possibility where we are, if the yields actually in 10-year begin to move lower, we are right at the 78.6% retracement as well. We could see this market pull back lower. Otherwise, we have this ABCD, and we can see the market to reach to about 164, 165 as well. But again, it depends a lot about with the correlation which exists with the 10-year treasury note. Yields, if they begin to move lower next week, I think we will see a pullback in this pair as well. Now let's take a look at the British pound. So British pound versus the US dollar, it remains so weak, very weak. Let's go and take a look at this on the weekly chart. So this was our big number that we were watching, 38.2% retracement at 1.2260. We saw some bounces on the daily chart right here, but actually it has been lower. So we'll just keep on watching this. Maybe it wants to tag these lows right here. around 120 level. That remains a possibility, which was a big 38.2% retracement, weekly retracement right here, and then we saw a nice move to the upside. So that's going to be a really critical level. Maybe I want to tag that as well. We'll wait and see. On the daily chart, here we go. It remains pretty weak. If somebody is trying to take a look at is an interest in terms of the currency, I think the euro has a better pattern in terms of if there's going to be a bounce. Here you can see it made a few attempts for rallies, pretty nice. 100 pips, 1 to 2 big figure rallies, but looked like it's a pretty weak. Look at what happened last Friday. So British pound seems to be one of the weaker currency amongst the euro between euro right now. Okay, now let's take a look at the Bitcoin, and we'll also try to cover some of the crypto right here. So Bitcoin very interesting because we were watching for this ABCD completion right between the 88,000 and 85,000 level. The market put in a low around 89,164 and has rallied back. So it remains still testing the top of the range. Let's see whether it is actually able to break out to new highs. And the chances are it could actually do that. If that were the case, we could have some targets. So let's just do an expansion. Here we go. Okay, we get rid of this. So we could see 113,600 and 120,300 as well. All depends upon if it is able to get above the 108,364 level on closing basis, and then I think we can look at these some of these targets. Just an expansion of this range. I've not done the bigger ABCD there, but right now it's just consolidating. It's just testing the top of this range. So we'll see how it will play out. Next, we'll take a look at Solana. Okay, I think this Solana I need to take a look at. Okay, there we go. So Solana is very interesting. If you recall, I done an analysis maybe 3 weeks ago, 2.5 weeks maybe. We were looking for an ABCD right at the 38.2% retracement around 205 level, but the market actually moved lower and completed this bigger ABCD right at the 61.8% retracement. And now what the market has done is just really shot up to 1.27 to expansion of this entire move, swing high to swing low right here. And the upper side target is that we could see $318, which will be the 1.618 expansion of this entire ABCD swing, and then of course this bigger ABCD in blue. And that's a target, but that could also be a pretty strong resistance in this market. So maybe we could see a pullback. Now let's take a look at the Ethereum. This is the daily chart of Ethereum. Let's take a quick look on the weekly chart. So Ethereum remains range bound, so upper bound, lower bound, and it's just bouncing between that, right? So let's now move one level lower to the daily chart, and what I see is it's right in this zone where we have pretty strong resistance at 35,000, 3,560. And look, the market found resistance right at the 61.8% retracement of this swing high to low, and then right here is between 61.8% retracement and 78.6% retracement, this swing high to this swing low. The chances are it might be actually in this ABCD structure. So we have the smaller ABCD in red, the bigger one in blue, and it comes down somewhere around 2730. So let's say roughly 27,050. So anywhere 2875 to 2750 could be a potentially strong support level. So we'll just keep on watching this. But right now it has found resistance. It had already Saturday put in a bearish candle. Now it has actually putting in another bearish candle, but the day is not closed yet, but it took out the lows of yesterday. So something to watch with Ethereum. So I think I've covered the main three cryptocurrencies right here. Now let's take a look at the gold market, because it's pretty interesting what's happening in the gold. here we go. So this is the gold market, and we were watching this, and I think the last video I had done, I was more bullish on the gold. And one of the reasons is, look at this triangle pattern, right? This is like a dynamite triangle. This is what I like to call them. Now it has actually closed above that last Thursday, but Friday, this is also where you have the 78.6% retracement, and we have these highs coming from the 12th of December 2024. It formed which is not an inside bar, but you know, it's a negative candle which formed. It's a range bound candle. It's basically a trading range. This is what took place last Friday. So although there I see two possibilities, and I'll actually show you why I think that might be the case. So for that, let's take a look at the spot market here, because the chart is a little bit different. So on the spot market, what I see is this market on last Friday actually formed an inside bar. In the futures, it's not the case. And then look, we have a supply coming here, here, and then here. So this is a pretty strong resistance level with the 78.6% retracement right above that. So there is a chance. There are two things. This corrective move that this market has been, it might be over, and you know, the market is actually looking to move higher, but it needs to get above this resistance level. Or the other scenario is that we are still in some sort of the corrective structure, which actually is my preferred analysis scenario. But again, we have both the scenarios on the table, and the price action will make it easy for us moving forward. You know, I hope we find a clear direction next week, and that we could actually still get a pullback. And you know, how deep of a pullback we get, we'll have to wait and see. But if we just take the retracement from this key low to this key high, then let's just take a 38.2% retracement, which comes right here to about 26.50, and getting below that, I think we could see a breaking of this trend line. Perhaps it might be in this bigger ABCD, which could see 2500. This is something that we have spoken about in previous videos. Now remember, this is spot market. This is not the COMEX gold. It's not the futures chart. So the price is a little bit different here. Okay, so this is what we are looking at the gold. I think I am slightly on the bearish side in gold, although you know, there are so many bulls out there for gold, and you know, I think gold has performed extremely well, second best performing asset class in 2024, followed by Bitcoin, which really had a nice rally from November. So it was actually gold actually beat S&P 500 in terms of the returns. So interesting to see. But again, look, this is the weekly chart, how many weeks it has spent right here. So we'll just quickly take a look at what had happened back in 2011, just to see, just to get some ideas of the price action. So one of the things is that if the rallies, they begin to fail, they are telling us something that, you know, the characteristic of the market might be changing. So this is what we are going to watch. We're going to watch for failed rallies. So these have been pretty strong rallies after a top was put in, and of course you don't know a top has been put in till it gets confirmed. So you know, there will be technicians which will, they are so good they will be able to call it, but again, you know, you wait for some sort of a confirmation. So here is the confirmation. We have supply here, 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 and this is where the big drop came in, and it remained range bound. Finally it broke the range after quite a few years actually. So what do we get out of this is to watch for failed rallies, and this is what we'll try to watch for. Otherwise, you know, every time it is actually making a new high here, high here, high here, here, if we begin to see failed rallies, then we need to pay attention. Okay, so we have covered gold, we have covered quite a few asset classes. Now let's take a look at the indices. So I'll start by taking a look at the German market. This is the DAX. Here, look, really strong market, very strong market, very different the US market. I had in fact this nice ABCD here, but it seems to be extending the CD leg, and on the daily chart, boom, there we go. And look, it looks like a runaway bull market right here. You know, it's just very strong close last Friday. And then if we take a look at the FTSE 100, and look, wow, we had a very nice close, went above the range. So again, the European markets seem to be on a strong footing. We had long before come up with some targets, but they need to be revised because the range expanded. 86.22 is something that we need to take a look at, which will also complete a bigger ABCD. Let's see if I've got this on the weekly chart. No, I don't, but on the weekly chart you can see that finally it broke out of more than 6 months later, broke out of this range. Now there is a chance that could it be an ending move with this kind of really strong bar, something like this which happened here. So of course we'll only find out after the further price action, which we'll find later on. Now let's take a look at the S&P 500 because it's going to be very interesting. Here we go. So the S&P 500, I'm not going to go through these big ABCDs because I've gone through these multiple times. You know that these were our targets. They met, and I'm really happy because this is what we forecasted months and months in advance, and finally the market was able to reach our target. So there we go. So here what we have seen is a pretty nice rally coming last week. It wasn't able to get above the high of the week of 6th of January, but it's a pretty strong looking candle formation. Now let's go back on the daily chart, and here I just want to show you this. When I did the last video, this is what I was trying to show you, that we had actually multiple nested ABCDs completing right here, and this was a pretty bearish close on 10th of January, Friday. And I'll show you the reason why I was turning a little bit more on the bearish side, at least for the short term. I will just show you that in a minute. But here we had this 38.2% retracement, which is kind of still a possibility. The market will reach that. Because what the market has done is it's got a really nice rally, but could it just be a bounce? We'll have to wait and see. So we need a stronger close, stronger than the kind of close that we got last Friday, because it is just a doji candle, which is just a very narrow trading range. It did close above the 61.8% retracement, so I would like to see two consecutive closes, ideally strong closes above the 61.8% retracement. Then we can say, okay, look, we have got a chance to go and make new highs. 6190 and 6300 could be on the cards on the S&P 500 cash. This is what we are cash market that we are looking at. Now if we just take a look at this on the futures chart, this is the S&P 500 E-mini futures, slightly different picture for the last Friday candle. So we have these nested ABCDs here. Because they roll over on the chart, I wasn't paying too much attention on the futures chart, but I think now it's just beginning to mesh up better. So we'll also make more use of the futures chart now for the S&P 500. Here it went right into the 61.8% retracement. So let's see what sort of price action we get next week. Remember, the markets are closed. I believe they are closed because of MLK holiday next Monday. So it'll be really Tuesday when we get the cash markets opening up. So let's just keep on watching this. I think that this is a good formation in terms of the candle, really nice candle closing in the futures. Let's see what sort of follow through we get. Closing above 61.8% retracement, I believe, is going to be pretty constructive, and we could see an expansion, maybe to 62.50 and 63.60. Right there. So this is what we are watching in there in the S&P 500 E-mini futures. Now I'm going to show you this. This is the chart of the Dow Jones E-mini futures, and here we had Dow done something which it had not done based on the media reports on CNBC since 1974. It closed for, I don't know, 11 consecutive days lower. And look at this. This was the exhaustion move, and it was terminated right here on the Friday, the 20th of December. And I had a really strong support come in right here because of the combination of 38.2% retracement, 50% retracement, 78.6% retracement, and 1.72 expansion of this move, various retracement right here. And this is where I thought the market is going to stop, and it did for a number of days, more than a week, in fact, even a retest, rallied higher. But it's this Friday, 10th of January, it actually broke below this. And it was a little bit surprising for me, to be honest. And this is when I began to think, okay, maybe we are in a structure which is of this kind, ABCD. So these are the next support levels which are coming in. We have good confidence of 61.8% retracement, and also the 78.6% retracement with respect to the 11th September low, and this is going back to 5th of August lows. Pretty good support in ABCD, but there was just no follow through next Monday. So that was another thing, and then we saw a really nice move higher. So I'm going to remove this. Could the market still get there? Yeah, maybe, but it's going to be a different structure. So I am going to remove this. There we go. Okay, done. I am still going to leave this here, but move it right here. The chart has got too many lines on it, so at some point I'll just clean it up as well. So what the market has done is thus far, let me get rid of this. It has moved really close to the 61.8% retracement. So between 61.8% retracement, 78.6% retracement is still a danger zone. If it's able to really clear this convincingly, I think, of course, we are going to go for new all-time highs, and we'll have higher targets as well. So this is what we are watching here, and on the weekly chart, here we go. Here we go. So a pretty nice looking candle. It's a bullish engulfing candle. This bearish candle is inside that. Yeah, pretty nice price action which took place last week. Let's see if we get a follow through bullish price action coming week, shorter week as well. Now, a really interesting thing which is happening is on the New York Stock Exchange Composite Index. Let me actually show it to you on the daily chart. So something really interesting which happened is we have this ABCD formation right at 38.2% retracement. It's a pretty nice move to the downside, but that has been negated now. So look, it had a really nice rally, and that's pretty good. So I think maybe we can still get a little bit of a pullback, but this is also a positive development for the price action for the bulls. Now let's take a look at the NASDAQ NDX. This is the cash market. Yesterday I did an analysis for the technology stocks. So I've already covered this in there, but I'll just quickly go through this. We had these nested ABCDs right at the 38.2% retracement. It found pretty good support. We have seen a bounce, went right into the 61.8% retracement. I think we have this channel formation going on as well. So getting above this, I would like to see ideally two closing good closes above this level. I think the market is then gonna make new highs as well. So let's take this on the futures chart really quickly. So this is going to be the daily chart. Very similar pattern. I've just not drawn the ABCDs right here, and look at the candle actually closed pretty strong for the futures, just like the S&P 500. So this is the level 21,770 that we need to be watching really carefully. Now let's take a look at last but not least, which is going to be the Russell 2000. Here we go. So we also got some strength coming to the Russell 2000 as well. At one point when it also broke below this key support I had on Friday, the 10th of January, I thought maybe we are in this structure, which is still possible, but it gets above this. But if it gets above, here we go, it gets above the it gets above this level, which is gonna be, let me actually show it to you right here, 2313. I think that's going to be a really positive development, and then price also becomes supported by the moving averages as it begins to close above the 20-day moving average. And if over time the 20-day moving average, if it closes above 89-day moving average, it's going to be pretty nice momentum setup to the upside. So this is what we are watching in the key US markets for next week. I think I've covered quite a bit. We covered the debt markets through futures and treasury notes, and then we covered dollar index, major currencies, Euro USD, British pound, Japanese yen versus the US dollar, and also crypto, Bitcoin, Solana, and Ethereum. And then we took a look at the gold market, and also then we took a look at the key US stock indices, and also the two European indices, German DAX and the British FTSE 100. So thank you very much for watching the video. Good luck, good trading, and if you happen to like our analysis and the video, then please do subscribe to the channel, and also hit that like button. Thank you very much. Speak to you guys soon. Bye.